Hello, everyone. This is Scott Montgomery of the Small Town Mercer. I want to welcome you today to my presentation. So, I'm going to be doing a series on the future of finance. And I'm going to end this series. I'm going to make probably 3 or 4 videos in this series. And I'm going to end this series with a case study. So, I'm still working on that. I think I mentioned that in my last video. So, I went and got a haircut and getting ready for spring here. So hopefully the snow's over with. Anyway, so today in my future of finance, this will be part one, and what I'm going to do today is illustrate what the present financial situation looks like in a nutshell. I don't want to get into a lot of technical finance details and a lot of economic theory. I'm just going to go with the basics of things because I feel I only need to do that to present my case, and my case is I think we have a better system emerging, and that's going to be my case. So the present system is what I'm going to talk about today. All right. So in the present system, when we want to generate income, generate finance, going back to my other videos, going way back to some of the earlier videos that I did here at the Small Town Mercer, I mentioned that we used to have a traditional way of economics, and the traditional way was you went to work for a company. You probably stayed there for 30, 35 years. And I'm talking about 20th century. I'm not going all the way back. So, generally that's what you did. You earned a check, or if you're a businessman, right, you started a business and you tried to save as much money as you could, keep your expenses down. You didn't have to go all out and get the bells and whistles and the web page and all that stuff going back in the early days, right? What'd you do? You got a storefront, you could afford it, you saved your money, you went into business, and you used whatever capital you could to turn into a product, and eventually, if you made it, then you started to invest and put money away and invest and put money away, and generally you made a profit, and then you started hiring people. All right, so back in the old days, people generally made more money than inflation took away from them. They could pay their taxes, they could make a living. They had, when they got to their retirement years, and I'm talking about not everyone, I'm talking about 75% of the population, they got into that situation and had a fairly decent, comfortable retirement and could leave something to their children. All right. Today, it's much more challenging, and so I'm going to go over today. So in the present, how do we seek profitability? All right. So here I'm going to point out the entity and the starting point in which you generate income. And again, I'm talking most cases, so that would be 75, 80% of the people. Not everyone falls into these categories. And then their impact, okay? So I'm going to start out with you either have a single individual or a small business, which would be a group of individuals, or maybe a single individual too. And how would they generally start generating income, assuming they have very little income to start out with? Okay, let's say they just finished college or high school or whatever they finished, or maybe they had a job and they're leaving the job to start a new company. Maybe they have enough money saved up. More than likely they don't, because we live in the today situation. So what they tend to do, a person generally starts a job or starts a business. He makes a wage. Small businesses take some of that wage or maybe some of that investment and maybe get a bank or a credit card to start their business. Maybe some people use their credit card to start off. They get a job and go out and find a place to live, and maybe they use credit for that, maybe they don't. I don't know. But generally people do that. All right? What is their impact? What is generally their impact? 75% of them probably will have, if you're starting a job, probably either it's positive or negative. It's 50-50, because are you going to stay at that job for 20, 30 years and get promoted, or stay at a certain level that's going to be able to meet your needs, especially financially? Probably not. So most people generally have to move on from a different job. How about if you start a business? Is that a positive or a negative? Well, how many businesses make it that start up? More than 75%? Probably fewer than 10%, I would think. So that's generally a negative. All right. How about a large business group or a corporation? You have a large equity firm or something, or that's privately held, or you have a big, large corporation. Well, they too can start off by borrowing, usually from a bank, or oftentimes corporation could be spun off from another corporation, which has been happening a lot lately, or a group that's been had a lot of income in the past, can do an IPO and get some investment capital together. And some of those people are given stock, other people's buy their stock. So they can do that. Or, like I said, they can also borrow from a bank. But as they get bigger, they can issue stock, right? And that's the IPO thing. And they can generate money that way. And or they can issue corporate bonds. People can buy their debt, and they pay a large interest. Okay, they could do that too. Especially once the stock starts selling, a lot of companies do that. If they want to pay for future projects, they'll go into debt and pay that debt back, and that's a lot easier maybe than issuing stock. All right. Well, if they get large enough, they can buy back their stock, right? And if the stock price goes down, they generally would like to do that. So they might end up buying their stock back. Then they could either sell it when the price goes up, they could keep it and add to their valuation of their company, or maybe they can borrow against it. If they need money, they can borrow against their own stock, Generally, they'll issue a bond, I would think, because that way that's a fixed interest and they don't have to risk their own stock. So I think that's generally what most companies do. Or they can sell a portion of the company right here, sell a portion. Or they can merge with somebody else and make a more stable corporation, A recent example would be the cell phone companies, T-Mobile and Sprint merge, and now it's just T-Mobile. All right, they could do that, or you could just sell it, right? You can just sell it off. When I grew up in the San Francisco Bay Area, and one of the iconic buildings there is the Transamerica building. Well, Transamerica, about 20 years ago, I believe, sold their company to a Dutch insurance group called Aegon. I think they're called Aegon. I think it's pronounced Aegon. I think it's Aegon. So, or Aegon, I don't know, but sorry. All right. So, but I just know they were sold, and that's no longer their headquarters. I think they are actually out here in Baltimore. I shouldn't, I'm a little ways away from Baltimore, but I think they're out here in Baltimore now. So anyway, that's an example of those companies. What's the impact of that? Is it positive or negative? Well, generally, I would say it's positive, because there aren't a whole lot of corporations that actually get dissolved and disappear, or big companies. I mean, there were a few that, during the 2008 financial crisis, there were a few of those. I don't think you see Payne Weber anymore, or some of these other big brokerage firms that used to be around. Bear Stearns, I think they're gone now. But largely, their stock and their stuff was liquidated to creditors, and so somebody made out, right? But rarely do those companies go out of business. So the impact on the corporation is positive, but what's the impact on the people who work there? Generally, it's negative, Now, that doesn't mean they're going to lose their jobs or even lose some of their income, but they might. I know they're not getting raises, at least rarely do they. Or in case of the company being merged or sold or liquidated or whatever, generally people are going to lose their jobs. So basically, only a small percentage of them will make out, at least in the short term. In the long term, that may be a different story, but in the short term, only a small percentage of people make out when a corporation struggles, or if it's not doing so well. Doesn't mean it's struggling, but maybe it's just mediocre and languishing. So anyway, moving on to government. How does the government make money? Well, they could tax its citizens, right? They can print money. I showed a video on that recently, right? And they can sell those bonds and pay an interest. Right now, the interest rate's what? Under 1%. I think, yeah, well, depends on what bonds you buy, I guess. But it's right around there. Sometimes I think the 10 years at 1.7 the last time I looked at. I may be wrong about that. But very small percentage. It's not enough to keep up with inflation. Inflation's now 1.7. That just came out either yesterday or today. So, you're really not making much money. And then finally, as we saw recently, we can issue tariffs. Now, if your economy is big enough and your consumers are large enough, then you are an attractive marketplace and people will be willing to pay tariffs to get into your market. But not every country is in that situation that they can issue tariffs. And so that becomes an issue. Okay, so that's generally how it's done. Now, finally, what is the impact of this on its citizens? See, that's the big debate today, and that's why I'm doing these videos. About half the country thinks we benefit from this system, right? Because we get checks in the mail, or government guarantees that our businesses are profitable, or whatever it is they think that they're doing. They think regulation provides a greater economic benefit. But half the country realizes that, as I think, by the way, I don't want this to sound biased, but it's going to sound biased. So I think that short term it's positive, but in the long run, is it positive? My philosophy doesn't think so. And a lot of people agree with that philosophy. About half the country, as a matter of fact, don't agree with that. So I didn't write it down here because I think it's a matter of debate. However, what is not up for debate is what happens when those don't work out so well. And that's happened quite a bit in our history. It's not an unusual thing. 2008 was one of those times. All right? So let's see what happens when an economy starts to falter. And we're going to try to involve, the economy falters. All right? So we're going to see what happens. First of all, the first thing that starts to happen, who gets affected first, by the way? Productivity falls. Who does that affect? What is it? Productivity, who does that affect? The worker. Small business. Right? The worker, the small business. So that first tier, that first category, that group that I talked about. What group do most people in this country belong to? Are they all corporations? Large business holders? Large landowners, large whatever you want to call it, very wealthy. Most people, no, not most people. Most people are in the government. Well, today it seems like it, but no, no. Most people are in this category. You're a worker. And when productivity starts to fall for whatever reason, the economy, the economic factors are not favorable, they're not good, whatever cause that may be. Productivity falls, workers and the small business people are affected by that. Small business people, if they're not profitable, they start to have to shed expenses. A lot of times that's workers. So it's very difficult for them. So that starts to fail. Then what happens? The next thing you start to notice is not as many people have as much money. So buying power, right, slows down. Then what happens? Now credit, right? I listed them down here so I wouldn't have to think too much. Credit payments lag, right? People are starting to use credit. And they're having a hard time maybe paying it off. Okay, and I'm going to say even rents fall. Okay, you start to have a problem with rents. They start to be a troubled asset. Okay, and this only makes sense. Okay, who gets affected by this? Not just the worker now, who else? How about the business owner? And we're talking large and small and in between start to hurt. So then you start to have this thing called layoffs. All right. It's a good thing I talk loud because I can't read that writing sometimes. So, and I apologize for that. Then what happens? Well, then business are going to have a hard time making a profit. So then the investors start to see their money dip, go down. Whether it's stock prices, whether it's bonds go down, whether it's a number of things, right? Or even if you've invested in a small business, you don't necessarily own stock. Maybe you own a portion of the business and it's failing or struggling. Then you're not going to see profits. If people are having trouble paying their credit cards or their rents, banks are going to have a problem, so they're not going to lend anymore. So then lending starts to slow down, right? And slows. And if lending slows, some of these businesses that are creditworthy can't get more credit to stay afloat. And that becomes a problem, right? And then you start to get into this recession. Now, here's the thing. Since 1930, we kind of treat our government today as Batman or Superman. Ring the bat phone or shoot a light in the sky or call out for Superman or whatever. And he gets in his phone book and here he comes. Well, the government started to stimulate in 1930, right? And then by 1933, they were finding it hard to stimulate, so the next president took us partially off the gold standard so that we could generate more money, which was a John Maynard Keynes philosophy. All right? And so what do you have here? You kind of have this circle, right? So when you increase this, the thought is you're eventually going to increase productivity. All right? So this increase is the fix. And we all believe that, especially people who are believers in our current system. And what did we get passed? This is March of 2021. What did we get passed? A big stimulus bill. They're bragging about it. Whoa, biggest ever. All right. Well, this is how we've been doing things since Hoover and Roosevelt and everybody else. We get to Nixon and we just get rid of the gold standard, right? No more fiscal, this is what we do. So this keeps going and keeps going and keeps going. What eventually happens? If you pour more and more and more into this, then you start to get this deflation. And why is that? Because pumping money into this system speeds up the process. And as it speeds up the process, eventually people get nervous. And I think today a lot of people are getting nervous. And the reason I say that is because they're not spending money and getting more money. They're holding on to their money. That's what they're doing. And that's a problem. They're holding on to their money. It's a problem for who? It's a problem for the economy and the spending side, because the spending side begins to slow down. And when you've had large amounts of money put through by the government and you're not going to spend it, remember that how the government kind of generates taxes and bonds and tariffs. That's primarily how they do it. Mostly, they're printing money. So the economy has to flow through, keep flowing. Well, when that slows down, they have a hard time paying the money back for their bonds. So that starts to dry up. So their ability to stimulate again, because business is not picking up, because money is not being spent, then that becomes a problem too, because now, you remember the first part of that, taxes? Now people are not earning enough money to pay taxes, or they're not paying enough taxes. So now you can't pay off what you printed. Tariffs, well, things are cheaper. You're going to buy your staples, but are you going to go out and buy things that maybe you don't need? Well, maybe initially when you get that big check, you might spend a little bit of it, but long term, are you going to spend it if things don't improve and inflation goes up? Probably not. And that's the big problem here. I think this has happened so often in the past 90 years that I'm afraid that each time it's tried, its effectiveness is not going to be very good. And so people are looking for alternatives. And that's why you're starting to see the cryptocurrency take off. Right? Because people are like, look, this isn't a real asset. This has a finite. Here's the difference about crypto. It's not part of the government. Right? It's not government controlled. It is controlled by the people, the masses. And basically, it's a cryptocurrency, so you have to follow a set of rules before more money is generated. And eventually, there will be no more money generated. So it's going to have an incredible value. Okay? So it's finite. You can't generate it by government policy. The government does not have any control over it. Disciplined people, I'm going to just abbreviate it. Disciplined people have control over it. So you can't just go out and campaign on promises and print more money and goad people into spending money so that the financial players, instigators, are the ones that make most of that money, as I showed in the previous 3 slides. Remember, the first stage, the people in the small businesses, they were largely negative. The large corporations, we were so-so, they were kind of in the middle, but largely that was a positive experience. But government, very rarely do governments fail. And when they do fail, what happens? They generally have a new political system, or somebody takes over them, or a foreign country invests in there and maybe makes it a colony. I don't know. But very rarely do governments fail. So, especially large ones. So, people are starting to say, look, I don't like the system of the government printing and devaluing my company, because in the old days, you could put it on a balance sheet, you could buy bonds, you could do a lot of things to make your income grow, your money keep up ahead of inflation so that you can keep meeting the payroll. Remember, inflation grows every year, cost of living generally grows every year, and you have to keep paying your employers and paying up your expenses to keep everything working, and that increases every year. So to keep your money and your profit increasing every year, you may or may not sell enough product, but what you certainly can do is what cash you have on hand is invest it somehow. And it's getting harder and harder and harder to do that because, the stock market has done well under Trump and now early on under Biden. But is that going to continue? Well, historically it has not. Why would I think it would continue in the future? And when you're not left with many other options, people are starting to look at that because they need to keep ahead of the pace of inflation. And there are very few things anymore that can do that, especially when you start to stimulate the people, and especially when you have a bunch of useless rhetoric that the rich are making all the money and all this other stuff. That's true, but that's not the reason. The reason they're making all of the stuff is because the government is giving it to them because they're the generators of our wealth. Without the banks and the large, wealthiest companies or whatever paying taxes or basically hiring the majority of people now in this country, whether it be through their own corporation or whether it be through the support system. In other words, I don't think people realize that corporations generate a portion of our wealth. And a lot of people say, well, no, it's small business. Well, most small businesses' customers are large corporations in one fashion or another, whether they own a restaurant or business service, they generally have large companies that are their customers, or a lot of business owners have franchises. And you don't have Ma and Pa's hardware store anymore. You have True Value or some corporate or Lowe's or Home Depot or some of those things. And so a lot of people are employed by these large companies, whether they're a customer of it, a subsidiary of it, or whatever. So I think that's growing more and more and more each and every year. And it's getting very difficult for those companies to keep their value. And that's why they're going into crypto. Now, in my next video, I'm going to show you how crypto financing operates. But I'm going to do so by showing a couple of videos. And so, because I don't want to get into a long, detailed explanation, I'm going to do that after I do my case study. So I'm going to do kind of a shorter version of this in my next video. So I'll show a couple videos and then I will kind of interject and show how that's different from this system. Anyway, thank you. God bless you all. Have a wonderful day. This is Scott Montgomery for the Small Town Mercer. See you next time.